To most people, a $1 million Bitcoin sounds ridiculous. But remember, so did a $120,000 Bitcoin back in 2020 when it was trading at just $12,000. Today, we're well into six figures, and 1 million is no longer fantasy. It's entirely plausible. Today, I'm going to show you how relatively small shifts in global capital and a shrinking Bitcoin supply can push the price to levels that most people can't even fathom. This isn't some hopium prediction. This is math, and once you understand how Bitcoin's price is set, its potential becomes crystal clear. Here's what most people get completely wrong about Bitcoin's price. They think that for Bitcoin to double in value, twice as much money needs to flow into the market. That's false. And this misunderstanding is why people can't wrap their heads around massive price moves. Bitcoin's price is set at the margin, meaning it's based on the most recent trades. If someone buys a single Bitcoin on an exchange for $120,000, that becomes the new market price, even if 19.7 million other Bitcoins didn't move at all. This isn't unique to Bitcoin. It's exactly how stocks, gold, and even real estate work. Your house is valued based on recent sales of similar homes in your area, not what you paid for it years ago. But here's where Bitcoin is different and why this matters so much. It's extremely liquid and transparent. Everyone can see the current market price instantly. Think about Amazon stock trading at $226. That price is set by what buyers and sellers agree on in real time. Not every Amazon share being traded, but that one price gets applied to all outstanding shares theoretically. I say theoretically because if everyone tried to sell their Amazon shares at $226 all at once, the price would collapse. The same principle applies to Bitcoin, but with one crucial difference. Most Bitcoin is completely illiquid, held long-term or off exchanges entirely. This brings us to the biggest misconception about market cap. That'll blow your mind. People think that if Bitcoin's market cap increases by $1 trillion, that means $1 trillion flowed into the market. That's completely wrong. Market cap is just the current price multiplied by the circulating supply. So if Bitcoin is trading at $118,000 with 19.7 million coins in circulation, that's a $2.3 trillion market cap. If the price doubles to $236,000, the market cap doubles to $4.6 trillion. But that doesn't mean $2.3 trillion in new money entered the market. It just means some recent trades happened at higher prices, and that price got applied to the entire supply. Only a small percentage of the supply needs to be bought at higher prices for the entire market cap to explode. Now you might wonder how Bitcoin can trade 24/7 on hundreds of exchanges with virtually identical prices everywhere. The answer is arbitrage. If Bitcoin is cheaper on Coinbase than Binance, traders and bots instantly buy on one and sell on the other, keeping prices synchronized globally. But here's where it gets interesting. Not all Bitcoin trades happen on public exchanges. Big institutions, corporations, and governments use over-the-counter or OTC services to trade massive amounts privately. These OTC trades don't immediately show up on price charts because they're negotiated at current market prices. But here's the key. Those Bitcoins still come from the same supply that feeds the exchanges. Let me give you a perfect example with MicroStrategy. When they want to buy 5,000 Bitcoin, doing it on a public exchange would spike the price and create massive slippage where they'd pay more for each additional Bitcoin as they eat through available orders. This would drive up their average cost and spike Bitcoin's price across all exchanges. So OTC lets them buy at a fixed price without moving the market immediately. But that Bitcoin they bought still exists in the available supply, and when supply shrinks, prices rise faster as more money chases fewer coins. Now here's where the million-dollar math gets wild. A macro-focused investment firm called UTXO Management recently published a forecast estimating institutional flows into Bitcoin of $120 billion in 2025 and another $300 billion in 2026. We're talking ETFs, pension funds, sovereign wealth funds, asset managers, corporate treasuries, and even governments. Around $60 billion has already flowed in this year alone. So what happens when $360 billion enters a market with a constrained supply? As of July 2025, only about 2.4 million Bitcoins are sitting on exchanges. That's the liquid, tradable supply. If $360 billion flows into this limited pool over the next 18 months, Bitcoin's price could hit around $245,000. But here's the kicker that changes everything. If exchange supply drops by just 20%, which is exactly what we've been seeing, we're down to approximately 1.9 million available coins. That same $360 billion chasing fewer coins puts Bitcoin at around $275,000. And remember, not all exchange coins are actively traded. Some are idle, some are custodied, so real liquidity might be even tighter, making these numbers conservative. But let's think bigger. What if just 0.3% of global capital currently sitting in gold, bonds, stocks, and real estate moved into Bitcoin by the end of 2026? These four asset classes represent roughly $68 trillion combined. Just 0.3% of that is about $2 trillion, more than 5 times the UTXO forecast. Remember, Bitcoin is still a relatively tiny asset, so even small reallocations from massive markets have an outsized impact. With the current exchange supply of 2.4 million Bitcoin, $2 trillion in inflows would push the price over $800,000. We're getting close, but how does it hit $1 million? Here's the exponential zone. If available supply shrinks by that same 20% we've been seeing, that $2 trillion reallocation pushes Bitcoin just over $1 million per coin. This is the suddenly part of gradually then suddenly, where price action exceeds the expectations of anyone not paying attention to Bitcoin's supply and demand dynamics. Even with rising prices in 2024 and 2025, exchange balances have continued falling steadily, suggesting Bitcoin holders aren't eager to sell and more institutions are moving coins into cold storage. Look at the math. In the conservative UTXO forecast, price and market cap more than double, but it only requires $360 billion to move the market cap up by $2.4 trillion. In the aggressive scenario with 0.3% capital reallocation and 20% supply reduction, $2 trillion in capital moves Bitcoin's market cap up by around $19 trillion to $21 trillion total. The actual inflows required are much smaller than the market cap increases because of how pricing works at the margin. So, is $1 million Bitcoin possible? Based on current trends, institutional interest, and simple supply-demand math, absolutely yes. The only unknown is when. It doesn't require fiat collapse or hyperinflation, just a relatively small shift in global capital into a constrained and shrinking Bitcoin supply. The real question isn't if Bitcoin reaches $1 million, it's when. Most people won't understand this until it's already happened, but if you're watching this video, you're seeing the math before the masses catch on. If this helped you understand how Bitcoin's price mechanics work and why $1 million Bitcoin isn't fantasy but mathematics, smash that like button, hit subscribe, and share this with someone who doesn't yet see how Bitcoin could grow gradually, then suddenly. The window to position yourself before this becomes obvious to everyone is closing fast. Thanks for watching, and I'll see you in the next one, where we'll break down exactly what percentage of your portfolio should be in Bitcoin based on these projections.